The COVID-19 pandemic has had a catastrophic effect on economies all across the world. Particularly small enterprises have had difficulty remaining viable. Several small firms are in danger of going out of business due to declining revenue sources and rising debt. Even big businesses have not escaped the effects of the recession. Several household brands in the retail, hotel and entertainment industries have declared bankruptcy or are in danger of failing. The prospect of insolvency is actual and present. Once regarded as solid and prosperous businesses are now coping with the harsh reality of a downturn in the economy that shows no indications of ending anytime soon. Several businesses have had to temporarily or permanently close due to the epidemic, which has led to numerous job losses and economic turmoil. Around 100,000 small companies have reportedly permanently shuttered their doors in the United States alone as a result of the epidemic, according to a report. According to the survey from Main Street America, 7.5 million small enterprises might go out of business permanently if the recession continues. Other places in the world where small companies constitute the foundation of local economies are in a similarly bad condition. The number of filings in the US has varied over time, although overall there has been a decline since the high in 2010. In the United States, the number of Chapter 7 and Chapter 13 bankruptcies filed peaked in 2010 at 1.14 million and 439,000 respectively. Notwithstanding the consequences of the COVID-19 pandemic, these statistics have now reduced to 229,703 and 149,077 in 2022 respectively. Personal liquidation cases account for approximately 95% of all filings in the United States. The remaining 5% is made up of business filings. Bankruptcies can be filed in a variety of ways, but the most prevalent are Chapter 7 and Chapter 13 bankruptcies. Chapter 7 entails selling the debtor's non-exempt assets in order to repay creditors. The remaining debt is discharged, indicating the debtor is no longer accountable for paying it. Individuals are the most likely to file for this sort of insolvency. Chapter 13 bankruptcy is likened to reconstruction. It enables debtors to maintain their assets while reorganizing their debt into a payment plan. The payment plan is typically 3 to 5 years in length, after which any residual debt is cancelled. Those with steady income are the most likely to file for this sort of bankruptcy. The prospect of insolvency is not restricted to small firms, however. Big firms are also feeling the heat. Retail behemoths such as JCPenney, Neiman Marcus and Brooks Brothers have declared bankruptcy. The hospitality industry has also taken a blow, with numerous failed hotel companies and airlines. The consequences of this extend well beyond the firms involved. When a company is in this position, it impacts its suppliers, vendors, workers, and the surrounding community. Suppliers and vendors may not be paid for products and services given, causing them to face financial difficulties. Consumer spending may decline as a result of employment loss, and the entire community may suffer as a result of the loss of services and economic activity. The possibility of insolvency is a long-term issue. Even if the pandemic ended tomorrow, the economic consequences would last for years. Businesses that survive the epidemic will be burdened with substantial debt, limited income sources, and an uncertain economic future. The pandemic's long-term effects on the world economy are yet unknown, but it is obvious that the threat of bankruptcy will persist for some time. Several businesses in numerous industries have had financial problems throughout the years and have been finally liquidated. These are a few well-known instances of businesses that have found themselves in this situation. After years of failing sales and growing debt, the venerable department store giant Sears Holdings Corporations declared bankruptcy in 2018. Toys R Us, the well-known toy shop, did the same in 2017 as a result of growing internet competition and dwindling revenues. Lehman Brothers, one of the biggest investment banks in the world, declared theirs in 2008 at the height of the international financial crisis. The energy corporation Enron followed the trend in 2001 after discoveries of financial fraud and unethical business practices. Same with Kodak, the photographic firm, in 2012, as it failed to adjust to the transition from film to digital photography. American Airlines declared bankruptcy in 2011 as a result of exorbitant labor expenses and fierce market rivalry. Blockbuster, the video rental giant, did the same in 2010 as it failed to compete with the growth of streaming services. Both the stock market and the cryptocurrency market are quite volatile, so investors must be mindful of the potential hazards. Both markets are not directly threatened by insolvency, but there are several conditions that might make investors more likely to experience financial hardship. The absence of regulation and supervision in the Bitcoin industry is one of the major threats. The value of cryptocurrencies is determined only by market demand because they're not backed by any government or financial institution. Because of this, the market is quite unstable and prone to unexpected value adjustments. However, several cryptocurrency exchanges have been the victim of cyber attacks and security lapses, which may cause investors to lose money. This can be especially damaging for small investors who may not have the resources to recover from such losses. In the stock market, subpar financial results, high debt, legal troubles, and market fluctuations can raise a company's risk of liquidation. These may also affect who works in these firms. Most people are not thrilled when a business declares bankruptcy, since owners lose practically everything and creditors only get back a small portion of what they lent. As a result, the shareholders are typically not interested in holding shares for the long term when the firm emerges from being liquidated. In actuality, the majority of them swiftly sell the shares on the secondary market. Instead of causing fundamental problems, this typically leads to an excess supply of shares produced by disgruntled or apathetic shareholders. Without much bustling to do, no roadshow, IPO, pumping, etc., these new shares often join the market, which has little positive impact on the share price. For those prepared to purchase the inexpensive shares and hold them until their value increases, this scenario provides value. It's important for investors to be aware of these risks and to take steps to protect their investments, such as diversifying their portfolios and staying informed about market trends and the financial health of companies. By being proactive and cautious, investors can minimize their exposure to the risk of bankruptcy in both the cryptocurrency and stock markets. In conclusion, projections of bankruptcy continue to be a concern for individuals and businesses alike. While the COVID-19 pandemic and resulting economic downturn have certainly contributed to financial challenges for many, the risk of insolvency is a long-term issue that requires ongoing attention and action. As we have seen, financial challenges can affect individuals and businesses of all sizes and across various industries. Will there be another 100,000 small companies to replace those that closed as a result of the pandemic and bankruptcy? Maybe there will be someday in the future, when we can all sleep well and never think of the looming bankruptcy. Alas, that may be in another world. For this one, the disaster could be near. Moreover, it's important to recognize that projections of bankruptcy can have far-reaching implications for the wider economy and society. Business closures and job losses can have significant effects on communities and industries, while the financial distress of individuals constrains social safety nets and support systems. If you enjoyed this video, don't forget to like and subscribe to our channel so we can bring you more exciting topics like this. Until next time, do take care and stay safe.